Today, we are back now with someone who does trade SMC and trades alongside ICT concepts with Omar.
Hi, my name is Omar, 21, and I trade ICT concepts.
This felt like a dating show there. Felt like a dating show. But yeah, welcome. I know that obviously I put a poll out in terms of ICT traders on Twitter, and we got a lot of people saying your name, and it just so happened you're out in Dubai as well, so we could make it happen.
Yeah,
that's
good
it.
timing.
Yeah. But normally how we start is nice and simple with everyone. Just tell us a bit about your journey, getting into trading, how long you've been trading for, some of the key moments, and then from there we'll just take it from there, really.
For sure. So I've traded now, this is my fourth year.
Mm-hmm.
I started 18. After I finished A-levels, I took a gap year. Now in the gap year, life kind of hits you hard. You have to it's a very weird, like you're in between like a rock and a hard place, essentially.
Mm-hmm.
I had to get a job, and I was working before during my A-levels weekends. I was working in Primark retail store.
Mm-hmm.
And then I shifted to Tesco's. And when I was working, the pay it's not great. Now, I come from a family, like lower class family. Mum and dad first generation here, essentially. And I just some people in their heart, you just know you cannot settle for whatever it is you're doing, right?
Mm-hmm.
So I thought of a way, has to be ways to make money outside. Now, I was introduced to trading before. I didn't take the step into it by IML. I had some friends that was sucked into by IML, essentially. I was looking at drop shipping. I was looking at other things, right? And trading kind of sat well with me. I'm very astute with mathematics, and trading goes hand in hand. The logic, the graphs, whatnot, higher highs, higher lows, that type of thing. I thought, it's just like statistics, right?
Mm-hmm.
So then I dived into it. Of course, I dived into retail first because the first thing you look at back then, now is different, and we can speak about that as well. The first thing I looked at was someone called Rainer Tao. I don't know if you're familiar with him, a big retail guy. And now he was just simple market structure and whatnot. And I thought, this is easy. Straight away, open a demo account, place a few sizes. I didn't even know the lot sizes and whatever. I was just getting familiar with MT4. Didn't demo properly, funded a live account. I lost that live account. And then what happened was I came across ICT's YouTube channel. Now, with ICT, there was a period where he was doing his private mentorship.
Mm-hmm.
This is 2018, and he was never posting on YouTube again. If you go on his YouTube channel, there was like a big gap between his uploads. And I was like, this guy is way too accurate. He's calling this level before it's getting there and whatnot.
Mm-hmm.
And I thought, let me try and get into this guy's mentorship. He opened it again in 2020, and I was able to get into it. Now, from there, it was a very big paradigm shift in my trading. The logic he was using was essentially the fading of retail. But now, right, so in the sense with my journey now, I studied ICT concepts. I purely use ICT's concepts. I'm funded. They do work. I saw your interview with Raja Banks, and we could speak about that as well. It's more so the person executing the concepts, essentially, right?
Mm-hmm.
There's 90% lose in every single, if you're trading wedges, if you're trading SMC, fair value gaps, whatever it is, it's 90% are losing. And it's because of the development of the trader, right? So now I fall back to only ICT concepts. I believe they do work. I believe that there is essentially no one speaking about real smart money though. I feel like everyone now is just a pattern trader. They just look for, are you familiar with the QM model? The
QM?
Quasimodo model. Essentially it's a run stop.
Quasimodo, isn't he the guy from
Quasimodo, and it's called
the Hunchback of Notre Dame.
Because it looks like that. It's basically a breaker block.
Okay.
It's an ICT breaker block. So a bearish breaker, high, a low, then a run on the high, and then the finger. So it looks like Quasimodo when he's hunchback, isn't it? People look for that without context. No higher time frame narrative. They see that on the 1 minute, 5 minute, and they're trading retail patterns, and they don't ever admit it. And the thing with SMC guys now, they kind of bash retail. I don't bash retail. I think every SMC trader as they develop, I used to bash retail back in maybe 2 years ago. You guys are my liquidity, and my, my take profit is your stop loss and all this malarkey. But then you kind of develop and you grow to learn. I know so many people trading SMC concepts. The majority of Twitter right now is trading SMC concepts, but how many win? It comes down to the executor, right? And it comes down to the thing of, they think they're trading SMC, but they're not.
Mm-hmm.
They're just essentially trading retail patterns. That's my opinion on the matter. And the SMC, right? it goes a lot deeper. I'm a person, right? I don't ever take someone's word as holy grail. ICT said this. I didn't even blind follow him when he was telling me it. So I went on to do my own back testing and studies, and he was always banging on about time. It's time, then price, time, and then price. The kill zones, for example, right? So you've got your London Open, the New York Open. But how many people even ask, why is this time of day high probability? And that kind of spot, why is the Asian range the Asian range? Why does midnight's opening price have, the weight that midnight's opening price has if you use midnight's opening price? And then I done a study, and I came across a lot of things, and it's very interesting. I'll show you the DM before I arrived here and asked you about, settlements and clearing houses. I'll give a few clearing houses, and for the people watching this, if you're a smart money concept trader, this is what you want to go into, because essentially it's all time critical payments, right? There's 3 things that I'd want the viewers to check into, right? The first is the CLS group. The second is the DTCC. And the third being the Fedwire. The Fedwire being the most important. But in the DTCC, you'll see the Fedwire as well. They're all co-linked together. Now, it's not your bank's moving price. It's not JP Morgan. It's not, UBS, IBM. It's not these type of, people, Citibank. It's not them. You have to think about their, large funds. 100% I agree. They're large funds, and they are a large level of liquidity. But who are they going to clear their positions to? They're going to these clearing companies. If you look at what the Fedwire is, right? The Fedwire is literally a clearinghouse. It's what they're doing is this. They're the ones facilitating all of the trading and the payments from large institutions. If you just Google Fedwire, this is what comes up. And I'm sure on the Google definition, it tells you one thing. It doesn't care about the price. They do it purely off of a time, like it's a timeline. This time this happens, that time this happens, whatever. And then if you go and you link these timelines, it's really, really cool. You'll start to see the pattern of London kill zone. This happens. New York kill zone. This happens. London's closed. This happens. The Asian range to midnight. This is what's happening. It's very, very cool. Just a step further into it, you'll see the timeline is kind of split into 2 kind of portions. Liquidity generation. Well, this is how I've broken it down. It doesn't say like this, but there's liquidity generation, because for liquidity to be delivered, it has to be generated, right? Liquidity generation happens from the Asian range to midnight a lot of the times. And what happens, what does it mean by liquidity generation? If you look at these timelines by these settlement companies, this is where they're taking in orders, pay-ins, and there's a time on the CLS group, I think so, and the DTCC, they have a time where they cut it off. This is what's happening for this day. Now, what we're on in terms of the financial system right now of the whole world, we're on something called a T+2 system. Are you familiar with T+2, T+1? So T+2 system, right? Pay-ins get given today. It will be delivered within a 2-day frame, right? This is what people mean by it's priced in, because what's happening with the deliveries from today is happening from 2 trading days ago. So not the weekend, the Thursday. Now, there's also going to be a paradigm shift in 2024, and this is said on the internet. And this is kind of why I think, how ICT's come back. He's come back and he's saying, I have 1 year to teach you guys, right? And he keeps, I don't know if you guys keep up with him, and he keeps banging on, this is the year you lot have. This is the year. And he's kind of hinting at something, right? If you check it, and it's public knowledge. If you go on the DTCC's website, I think it's March, the 21st of March, 2024, which is next month, there's going to be a change in the gross settlement, it like the whole financial system. They're going to change the way they want to do it. They want to change from T+2, from it delivering in 2 days, to a T+1. Now, there's also a T+0, which is basically instant. Now, they can't do T+0, make that jump from T+2 to T+0 because of efficiencies and the way it can damage. People just aren't ready for it. Institutions aren't ready for it. They don't have the, they haven't
facilities and infrastructure.
Exactly, they haven't innovated themselves enough to handle that kind of jump. So they're going to move to a T+1. And now the T+1, it has a different timeline to the T+2. So I'm assuming there's going to be some sort of change in the financial system given to T+1. It won't be large. It shows you the kind of times they want to move to. It's perhaps half an hour in a difference between it. Maybe your kill zones will shift 15 odd minutes or whatnot. But nonetheless, it's proven. Because a lot of people think SMC is just made up. It's an algorithm. It's just a random algorithm that doesn't consider fundamentals or interest rates or news or anything of that sort. What if there is a document that I can share with you guys, right? And it's said, and it's a central bank that says it. It's not a secondary source material. It's a primary source material from the Swiss National Bank. And they say that the pay-ins and payouts are all delivered algorithmically by a complex algorithm. I don't know if this is the algorithm that ICT hints to, but it kind of makes sense that it can't be buying and selling pressure. Given these big entities are saying, right, it's all on a timeline. Price isn't relevant to them because price isn't a constant on the chart, right? Time is a constant. Every single day it goes from midnight to midnight to midnight to midnight. But price can go from 101 on the DXY to 102. It doesn't have to start again from the base. It can keep on going. They don't care about the price. Everything is delivered swiftly on a timeline. This is what people don't consider. Now, why is this important? And I know I'm talking a lot, but it's important stuff. The reason being, in science, right, every single model is, repetitive, and you can make the same model essentially, right, like gravity in a vacuum and whatnot. The reason is because there's controls. Now, if there's controls in your chart, which there is, clearly is time, and we know that what happens in specific times, you can have a very repetitive trading model most days of the week. The only thing you need to align is price within the time zones. Now, it's when I saw this, and this isn't from ICT's mentorship. This isn't, I don't know how many people were in ICT's mentorship that's watching this. If you are a chartered member or whatever, you can kind of back me in the fact that he doesn't give it to you on a plate. He pushes you into that direction. He kind of talks in riddles. This is why a lot of people have their own mentorships and stuff, because cuts up the fluff from ICT, essentially straight to the point type thing. And I was essentially pushed into that direction to find that. Now, when I found this, I don't know how familiar people are, but 8:30 a.m. across a lot of markets, the currency market, indices market.
You're talking UK time?
No, US time. 1:30 p.m. UK time, right? And you can backtest this. And a lot of people on Twitter talk about the 8:30 time. There is usually a retracement into some sort of fair value gap or a run on stops. And 8:30 essentially is, you'll find a lot of high probability trade setups within the 8:30 time, give or take a 15-minute candle, so 8:15 to 8:45. That Fedwire thing we spoke about, there is an injection of liquidity that the Fedwire do at 8:30 a.m. every single trading day. How is it that lines up with a high probability trade setup? And I trade this setup personally, 8:30 a.m. That time from them lines up with a high probability technical a lot of the time. It can't be a coincidence, right?
Well, it's interesting because obviously when I trade as well, I trade purely the technical side, and even with fundamentals, for example, because at that time, 1:30 p.m. UK time, so 8:30 New York time.
News events at that time.
Yeah, a lot of news events at that time. So, is that injection the news related? Is it the Fedwire, as you say? This is the interesting thing about trading. This is why I sort of adopt the mentality of I just focus on the technical side. I don't focus on. Don't get me wrong, there's, what you've presented there and discussed there can be very helpful, especially if it aids into your bias, for sure. But for me, like you see these debates, you see these debates on Twitter and online, like we've seen, we had Raja on saying, outlandish claims like SMC doesn't exist, but then afterwards saying how, this is how the banks trade is the bit that he doesn't agree with, for example.
I totally agree with that. Banks do not trade SMC. There is not an SMC trader at a JP Morgan, for example. I don't know where this institutional stuff even came from. I think
it's marketing. I think people start courses and they say, because even before SMC, there were courses saying, we trade like the banks, even if they were teaching retail, even if they were teaching people. I don't like the terms. I've never liked terms like retail and all this.
I agree.
I just think there's different types of confluence, there's different strategies, but because of marketing and because it's easier to sell something if you say, hey, this is shiny, this is new, this is the way, this is how the big players and the big boys are doing it. I think that's where it came from, because before smart money concepts were like kind of in the limelight, these recent years, a lot of these guys selling courses were selling what people define as retail, so your trend lines, your wedges, your flags, etc. But yet they were claiming to sell it as this is how the banks trade, So I think that's where it comes from.
I even used to have a lot of back and forth. On Twitter right now, I'm not too active. I'm more active more so on Telegram and Snapchat. It's just, I think those social medias is way easier to filter out, because Snapchat, you decide whose story you want to watch, and Twitter, everything's just in your face now. And I think from last year, the tension from trading has gone to just debating pointless things on Twitter. So
I think there's constant debate. I think it's all about, can people do a healthy debate?
I totally agree.
Can they, do they just get too polarized? So like the issue, not that I have with ICT, for example, but the issue I think a lot of people have with ICT is simply just because people just get too associated to the man and to the idea.
It's very cult. It's coming from a chartered member that only trades ICT. It's cult. It's a cult. So when I see his posts and there's people calling him king and the goat and all these, it's cult like, and there's people that have his emblem in their bios and whatever. He's got a cult like following, isn't it?
And it happens though. Like I respect it in one degree, because at the end of the day, I have nothing against ITT. I have never watched. I think I watched like 3 or 4 of his recent, I think 2022 mentorship.
Oh yeah.
But I haven't like actually watched any of his content, and I haven't been in his his mentorship or anything like that either. And so I don't, I can't give a comment. I can't say that ICT is bad or good or anything. What I know is, look, he's putting a lot of information out on YouTube for free. Right, over this last year in particular. I know that he's giving a lot of information, Twitter Spaces, for example, talking about psychology, etc. as well. As you say, the one thing I do hear, and even from watching those 4 or 5 videos as well, there's a lot of fluff, as you say. There's a lot of rants and stuff like that.
His own personal life gets dragged into it.
Yeah, so like I hear these things, right? I also know from years and years that he just loves to, I don't know if he loves it, he must love it because he wouldn't do it otherwise, but he loves to like try and not attack, but he loves to have debates or has like this drama with other people, right? Whether it's a guy called something Vinny or something.
It used to be Astro Effects.
It was Astro Effects, Vinny, and then it was Raja Banks, and there's Vinny. Then there's always someone. That's what I found. And at the end of the day, look, if you got time and energy for that as a man with with a family, fair play to you. Maybe he's made that much money from trading, he has the time to do it. I don't know. But even then, it doesn't bother me. Like this is the thing where people get involved with these things. I never understand it when you pick sides and things and waste your energy when you're still not a consistent trader. That's where it gets ruined. You
hit the nail on the head. The inconsistent traders wasting time on Telegram group chats and wasting time on Twitter, and a lot of people do this on Twitter as well. Twitter, there's 2 sides of Twitter. You can either be on the very hard side or the very helpful side of Twitter. Now, a lot of people, what they do is this on Twitter. They'll have a hard day trading and they'll go and post about it on Twitter. And as brutal as it sounds, kind words and people DMing you, oh, it's okay, but it's not going to help you become better.
Of course.
It's nice to hear. It can be reassuring. Sometimes it's good for the mental. I totally agree. But going there seeking attention, or it might not even be seeking attention, you just might want to put it out there saying, look, I'm a trader and I take losses. But if you're taking consistent L's and you're inconsistent, don't be on Twitter posting. When I was learning, right, I was in my gap year. So I had the benefit of time. It was literally just wake up, Tesco's, study. Given if I had a late shift or early shift, I would study before or after. I'd even study in my lunch break, right? Now, I was nowhere to be found on socials. I was studying minimum, perhaps 4 hours a day, smashing it out, right? Now, there's people out there, and I help people learn how to trade. And I tell them all the time, I see you on the Telegram chat for 4 hours a day. How can you be studying and be on the Telegram chat for 4 hours a day? It makes no sense, because there's a thing, right? Community is good to an extent. Now what I do is I only expose people to the community I have once they done some work, because if I just put them straight in, they're just cushioned, right? Community is good, but if it creates complacency and I'm just wasting time, You don't need a community. Remember, trading is a solo game. I say to all the people all the time, if you're in a group trading, let's say it's 5 people, there's one person trading and 4 people taking a signal. There's no way you can open a chart and you're both seeing the exact same candle and the same idea. You may have the same setup and whatnot, but the fact that you're both finding it in the same speed, because some people find it faster than others, the way that you're emotionally feeling to take the trade, there's no way you can have the exact...
It's become a herd mentality.
Exactly, it's a herd mentality. That's why I say to people, do it solo. And when you do it solo, it's hard. It's very, it can be quite lonely, right? Coming from someone that done it by themselves, it was very lonely. But you will excel way faster than someone that is comfortable. It's essentially jumping into the deep end, isn't it?
Yeah.
And one thing with
it's embracing the adversity, isn't it?
Exactly. You have to get comfortable with the uncomfort, right? And something with ICT as well, right? And the smart money concepts. There is a big difference between the two, right? The difference is this: being someone that's studied ICT's materials and seeing what's on the SMCs today, ICT talks a lot about narrative. A lot of the times it doesn't even point to technicals. He does something called a weekly commentary, daily commentaries and stuff. And it's all about narrative. The way it was in the mentorship was he gave 12 core content, and those are lessons. And then the weekly commentaries is just the blending of all the lessons, and essentially in real-time trading. The lessons are basically useless without the weekly commentary because it shows you how to use it. Essentially, it's like the cement between bricks, building a house.
Okay, yeah.
Now, a lot of people, what they do is this. They learn, and I was very guilty of doing this as well. Look for the keywords order block, imbalance. Okay, this is order block, this is imbalance. I've got the holy grail now. And they'll go and do it. But they don't understand where ICT excels is understanding the narrative. Right? Knowing, is the day likely to point towards higher prices or lower prices? This is where you should start from. If you can sieve out a bias, you should only trade in line with that bias, because in a 5-minute time frame, it's going to look like